view of the construction industry, specifically the class of business that we are involved in for our builder's risk program. So the first thing that we're going to talk about today is residential projects. And sometimes the question comes up like, what is a residential project? For the sake of discussion today, we're going to call residential projects 1 to 4 family detached structures. So if you think about it, that's the largest single part of residential construction in the United States today. So you can see some of the numbers on the screen now, and I think you'll find it's a pretty healthy housing market. We hear a lot of the headwinds about interest rates and the stock market and this and that, but the truth be known, it's really a supply and demand issue where there's not a lot of supply of new housing and there's a great demand out there now. And this is pretty much coast to coast, East Coast, West Coast, Southeast. We have a great demand for new houses and there's just not enough of them out there. So new housing starts, which were announced at the end of February, currently stand at 1,215,000. So to give you an idea, if you go back in the last 30 years, basically anything over 1 million single-family housing starts was considered a relatively healthy housing market. So at 1,215,000, we have a healthy single-family housing market. So here's where it gets pretty interesting. So the median size of a building of a single-family home that they're building now in the United States is 2,261. So over the last 20 years, the size of the new homes were going up. But starting in 2020, they started coming back down again. So actually what we're seeing now is a smaller home. The median size of a home is less than it was a few years ago. I don't know if that trend will continue, but it might because of the cost of housing. 91% of single-family detached homes are frame. We have a lot in the Southeast that are stucco, and agents think, oh, that's a masonry product. But yeah, but if the structure is made out of frame, the supporting walls are wood, they're frame, then the whole building is considered frame from an underwriting standpoint. So, over 9 out of 10 homes in the United States are frame homes. We still do some concrete block homes in the Southeast, and there are some solid brick homes, Northeast, Midwest, but it's a small part of the marketplace. Here's where it gets very interesting today. And so in March of 2022, the average sales price of a new home, single family in the United States, is now up to $511,000. I want to clarify that because that does include the lot. So if you take the lot out of the average home, you're still at over $400,000 construction costs for the average home being built in the United States today. Not that many years ago, the average was under $200,000. So this tells you what's happened to housing in the last year. The value of housing has skyrocketed. I saw 25-30% increases are not uncommon. And this is somewhat geographic. It's actually higher in parts of the country, percentage increase. But pretty much everywhere, the cost to build a house now has gone up. And we can talk about the different factors, be it the supply chain or interruptions, just the cost of building materials, the lack of skilled labor. So the labor that's left is charging more. And it's reflected in the sales price of a house is how long it takes to build them, and that's taking longer too. So this gives you an idea. We're going to tie all this back to the product that we, our builder's risk program, and what that means for you, the agents, and how we insure this stuff. So that's the residential project. Now I'd like to move on to the next screen, and that is the commercial projects. And I looked at this because in our program, we don't differentiate between residential and commercial. It's all based on value. So whether it's a $2 million home or a $2 million Starbucks freestanding being built, coverage-wise, it's the same forms, everything, and the pricing is the same too. So, but I think it warrants looking at this. So when I looked at commercial projects for the United States, in 2021, there was $497 billion, that's $1 billion, in commercial construction put in place. It's a large part of our economy. The median size of a commercial building being built was 19,000 square feet. That seems like a lot, and it is. I mean, there's a lot of the large distribution and warehouses and the office buildings and things like that. There's a lot of big ones being built. But it also means there's still a lot of the small ones being built that are less than this. The average cost of a commercial structure is $490 per foot. What we see, and I don't have that up here, but the majority of these commercial structures are either masonry non-combustible or fire resistant. You don't see a lot of the frame commercial being built anymore, maybe a little bit in the southeast. So for the most part, these are masonry structures. The average value, this is all construction, commercial structures, private being put in place, was 9.3 million. So that means there's an awful lot under 9 million, but that is the average. Let's go ahead and move to the next screen. I thought it would be interesting to take a look at what we're currently insuring in our program for Victor Builders Risk. This is our typical, we call them paper general, residential general contractors that are building houses. And this is who we insure every day. And the term paper general came about because a lot of them have very few, if any, employees, so they sub everything out. And that's a paper general. And that's pretty much historically the people that are driving the custom home building industry. These aren't the large national builders, the D.R. Hortons and stuff. These are all the custom builders out there. And I could probably tie this back to the average sales price of a house. That was probably being driven down by the national builders, the tract builders. Our typical insured is the custom home builder, someone that builds 5 to 7 homes a year, probably an average value of $500,000 or more, excluding the land. Takes 12 months now to build and sell these homes, sometimes longer. The vast majority, 90%, take the $1,000 AOP deductible, which is our lowest deductible. Most of them are happy with our built-in automatic coverages, so they don't need any optional coverages. They don't need to increase any automatic coverages. They are very content with the product that we put out there, our base coverage form. So there's literally thousands of these type of contractors in every state and parts of every state. And like I said, they're the ones that are driving this custom home building market. It's just the way homes are built. So then you think, all right, if this is what we're going to insure, what's important to them? So I kind of want you to start thinking about, okay, now we've described the residential construction marketplace, the small commercial marketplace. We've talked about our typical insured. So now let's kind of pivot a little bit and let's talk about what's important to this class of business. So let's go ahead and go to the next slide. So the first thing you're going to look at on these small paper generals is going to be, okay, what kind of coverage can I give them without having to negotiate with an underwriter, without having to change the pricing? What is the base coverage form? That's how you really compare programs. We're very proud of our base coverage form. We think it has more automatic coverages than the vast majority of carriers out there. And I will say we're always looking to add more. But we have 19 automatic coverages built in. We're going to go over a few of those. Soft costs, which we've done webinars on soft costs. Labor, materials, overhead, profit, and then soft costs is on top of that. We build in $100,000 at no additional cost. It's an automatic coverage. Very unusual in the marketplace. Transit coverage and temporary storage are two that most carriers have, but you need to look at what limits they provide. We automatically provide $500,000 in transit and $500,000 in temporary storage. Give you an idea, you might have the window package for a nice house is being delivered. It's not ready to be installed, so they're going to put it in the warehouse and store it for a while. That would be covered on our form automatically. Even if the windows were being transported by your insured, that would be covered. So the transit coverage is also built in automatically. Those are some of the big ones, but I'm going to briefly put this up here. This is an example of our supplementary duck page, which lists all of our automatic coverages along with the limit of insurance that's included. Now, a lot of these can be increased if you want them to. I'm pointing out that probably the majority of these custom home builders, these limits would be adequate and more than adequate. So you can see I referenced soft cost at $100,000, transit and temporary storage $500,000. I'll draw attention to a few more. Ordinance and law built in at $1 million at no cost. Some of the more abstract ones are fraud and deceit, blueprint, and claim preparation. It just shows you the breadth of coverage built into our form. And once again, this is not something you have to negotiate with an underwriter. Once you write someone in our program, they automatically get this coverage. Let's go ahead and move to the next one. So the next thing we're going to point out is ease of doing business. And this is really looking at it through the eyes of an agent. So we provided a very broad-based coverage form with no negotiations necessary. The next thing we're going to do is how can we get you a quote and a policy quickly. So we spent a lot of time designing our digital platform. We call it B Squared. We think it's very, very good. We have a lot of agents that really enjoy doing business this way. So it's just something that is there for you. B Squared is the preferable way of doing business with us. So we would, recommend that you get registered, get all the people in your agency registered. And when you get a quote, you go in and enter some basic information, hit a button, you get a quote. Looks good, hit a button, and you get a policy. This can be almost instantaneous. What I'm going to do now is kind of talk to you a little bit about what we call a pass-through risk. This is the typical custom home builder that you're going to insure, building 5 to 7 homes a year. And what can I do to do this quickly? So we're going to show you the parameters that make things flow through our system. But I do want to stress that we do write things that don't flow through or more complex risks. I'm just trying to point out the common risks, the ones that you're going to see the most of. So once we're doing a lot of those for you, you're going to have the unusual one once in a while, be it whatever it may be, a large renovation project or a higher valued home. And we gladly can do those for you. It's just we'd like to think those are the exception, not the norm. We do have broad eligibility because our eligibility really is based on value. And in a coastal area, up to $1.5 million should flow through pass-through. In an inland area, up to $3 million in value will pass through automatically. Let's go to the next one. And I just want to point out a few of these things because this is the typical risk. This is what we see a lot of. So the first thing we're going to ask you is the ground-up new construction. If it's a renovation project, be it insuring only the renovations or insuring the existing structure and the renovations, we will take a look at those things that they generate an underwriting hold. But if it's ground-up new construction, then that starts the qualifying process for the pass-through risk. Is the project less than 30% complete? If it's less than 30%, we're going to ask you the question. You're going to say yes or no. And if you say yes, it's less than 30%, then it moves on to the next pass-through question. If it's over 30%, it's just going to generate an underwriting hold, and we're going to have to talk to you about it. Is the project within ISO protection class 1 to 7, which is the majority of the United States is 1 to 7, then it would pass through. If it's 8, 9, or 10, it generates an underwriting hold. And then once again, I mentioned this earlier, if it's in a coastal area, coastal county, $1.5 million or less is the top value that will flow. Doesn't mean we don't want to write $3 million or less inland. So back to that average sales price of a house, what was it, $500,000? That's well within these pass-through criteria. So the vast majority of what's being built from a value standpoint should flow through the system. And then the last question we ask is, do they have 2 years experience? I mean, they know what they're doing. They've built a house before. Sometimes we write a policy in the name of the owner or the investor. That's okay. We're still going to need you to answer that question to make sure that there's a building entity, a general contractor per se, on the job site that's done it before. That's what we're after. We need to know if somebody's doing that. So that's really how we would ensure the pass-through risk. So I guess what excites me as I look at the housing market today, there's a lot of new houses being built. And I could go area by area, but it's pretty much across the country, maybe a little more concentrated in some of the Sun Belt areas, but there's still a lot of new homes being built in the Northeast and Midwest. We are an admitted product. We're in 48 states. Only 2 states we don't do business in is Hawaii and Alaska. So the rest of the continental United States, we gladly write business. So hopefully that kind of gives you a brief idea of what's going on in the housing market today, the single family detached, 1 to 4 family, and the small commercial market. So what I'd like to do now is open it up to questions. Whatever questions you have on builder's risk insurance, I'm here to try to answer them for you. So Darcy, let's go ahead and see what we got for a question standpoint.
All right, and real quick before we get into questions, on that last slide, the V-squared pass-through guidance, we have offered a handout to everyone on this webinar that has all of that information if you would like to download that and use that for your next builder's risk quote in V-squared. All right, so let's get into the first question. What is the limit of coverage that the maximum limit of coverage you could possibly provide terms on?
All right, the maximum limit for our program is $5 million on frame construction, frame and joisted masonry. It is $10 million for masonry non-combustible and fire-resistant construction. So we can go up to 5 on frame and 10 on other things. Once again, I draw the attention back to the averages, so we're well within those averages of the majority of things being built. Good question.
All right. Do you write frame construction?
Yeah, absolutely. So it's actually, that we've talked about it. It's not a bad question simply because if you are a builder's risk market and you say we want to write home builders, if you remember on that first screen, I put 91% of all single family detached homes are frame. So to me, if you have to write frame construction, if you're going to, bill yourself as a home builder's risk program. So yes, we write a lot of frame construction in these value bands. And we do ask the question on separation and things of that nature. So we do underwrite it because it is the most hazardous of all the construction classes. But it's a good class of business, and we've been over the years made an underwriting profit. And but yes, it's a long answer to the question, but we do write frame construction up to $5 million per structure.
All right. Now, how is wind coverage handled?
Wind coverage, for those of you in the non-coastal areas, you're probably going, what? So in wind coverage areas, in coastal areas, our main guideline, and it's a pretty simple guideline, is we do not write business within 1,000 feet of the coastline. Now, a lot of people are going to go, what in the world is the coastline? So if there's ever a doubt or a question, give us a call. We have an 800 number. Go over that in a minute. And give us a call, and we'll map it for you and tell you. It is of the coastline, what I call the true coastline. If there's a bay or a river that goes inland, that's not the coastline. It's the true Gulf of Mexico, Atlantic Ocean. That's where we're concerned about this. And this doesn't apply on the West Coast, only the East Coast and the Gulf Coast. So within 1,000 feet, we do not write the business at all. If it's over 1,000 feet, then we'll write the business, including the wind. We do have in some coastal areas what we call mandatory wind deductibles. And those are percentage deductibles, 1, 2, 3. We even have a few 5% in certain parts of the country, and those are mandatory. That's not negotiable, but we do write the wind. It's not within 1,000 feet of the coast. Good question.
All right. Now, do you write builder's risk for started construction as well?
I'm sorry, Darcy, for what construction?
Already started construction.
Right. So if you remember the other criteria on the pass-through risk, is that if it's less than 30% complete, then we'll write the coverage, right away. So yeah, it's already started, but it's only 20% done. Maybe the builder thought the owner was going to do the coverage, or vice versa. Neither one did. So now you're trying to place the risk. That risk would actually flow through if all the other conditions are met. If it's less than 30%, if it's over 30%, you're going to have to. It's going to generate an underwriting hold, and we'll call you and get the story of what happened. So, good question.
All right. Now, is the builder's risk policy premium fully earned, or does it complete early if there's a prorated fund?
So it's interesting today in today's world is we write, the majority of our businesses are written on a 12-month policy, and it's fully earned, everything's fine. And then people will say, well, what about pro rata? What if they finish early? Well, what we're seeing now, depending on the value of the structure, the vast majority of these are actually taking longer than 12 months. So the question then becomes, what if we have to extend the policy into, the second year? We can readily extend the policy if you let us know you want 3 more months coverage because things have been delayed. That's not a problem. We would like to keep our bulk of our business at fully earned. Unless it's a very small project or a large builder building a number of smaller homes, we'll work with you on that. But for the most part, like I said, they're taking 12 months or more to build. So the pro rata really doesn't mean much if that's the case. So, but when in doubt, pick up the phone, give us a call. That's a good question, and we'll work it out with you on a risk by risk basis. Good question.
All right. Now, do you limit tract homes?
Do we limit tract homes? So the term tract home really came about from the national builders. You got a builder that comes into an area and they're going to build 1,000 homes, and they're all pretty much the same cookie cutter homes. And there's going to be 1,000 homes in the subdivision. That's a tract home, tract development. Probably not our market at some point. We don't really have a limit per se. If you get involved in a larger single-family home builder, you can start the process by entering it in V squared, but then we're going to call you and talk to you about it. We do have a reporting form option that's been very successful in the marketplace. So we will take a look at things. There's no set limit. It's going to depend on where you're at. I mean, coastal areas, we take a very hard look at that kind of stuff. Inland, we're a little more, readily available. But we will work with you on that. Good question.
All right. Now, will you write in the name of the owner and the builder?
Yeah, absolutely. I mean, we see about 2/3 of our business in the name of the builder and about 1/3 in the name of the owner, developer, investor. It doesn't really matter to us. It's just I would add the other entity as an additional insured. And do remember, if you write in the name of the owner, we still want a few of those underwriting questions answered on the building entity. So it's going to be, have they done it before? How many homes do they build? Just very basic underwriting questions on the building entity. Because usually what we find is the owner is going to hire somebody to manage the job site for them. As long as that manager of the job site has experience, we're okay with that. Good question.
All right. Now, do you write for commercial buildings?
Yeah, if you remember early in the presentation, I talked about residential, 1 to 4 family detached. And then the next screen, we talked about commercial structures. The average structure in the United States, the average, I think, was 9.3 million. That includes all the giant ones out there. So that means the vast majority of these commercial structures are smaller than that. They're below our $10 million limit on commercial M&C. So we would readily write those commercial structures based on value. If it is a framed commercial structure, it's still subject to the $5 million limit, but we can write it. It's not a problem. We have, we write banks, we write Starbucks and Dunkin' Donuts, Jimmy John's sandwich shops, and Dollar General stores. I could go on and on and on. We write all of that stuff. So commercial's fine. We like that. Good question.
All right, and let's do one more question. Will you write water well drillers or well construction for municipalities?
Yeah, that would be more of a water well contractor wouldn't really have a builder's risk exposure. They might have some kind of installation floater exposure. But I mean, the answer would be we write structures being built, be it some kind of structure, and they need builder's risk coverage on that. So that would be something we probably wouldn't do. But I will say when you're building a house, there's rough plumbing that goes in. Sometimes from the main plumbing line, they have to tie into it. All of that is covered on our builder's risk policy, so we would cover that. And if you were building a well while you were building a house, that would be covered on the builder's risk. Whatever, materials that go into building that well would be covered. So maybe that's a better way of looking at it. But we are more interested in insuring the whole structure, not just that part of it. Good question. You guys made me work today.
All
I
right.
asked a lot of questions.
There are quite a few questions, and unfortunately, we did not get to answer all of them. So if your question was not answered, Jeff or someone on his team will be reaching out to you. I'll go ahead and put Jeff's contact information up here on the screen.
Yeah, I do want to stress to everybody, too, that 800 number, 800-844-7472. If you have any questions, maybe you've submitted a risk and it's a rush and you need us to get back to you right away, call that 800 number. If you have to leave a message, we'll get back to you right away. Many times we'll answer it and you'll get through to a human very quickly. And you can email us too. And the best email is that general email address, buildersrisk.us@victorinsurance.com. We understand that builder's risk is very time sensitive. You don't know how many times you guys call us and say, they forgot to get builder's risk and the closing's at 2 o'clock this afternoon and it's 10 in the morning. So we will do our best to get you we'll get you a quote, and then if you want to issue it, that's even better. We'd love to issue it. So that's our goal.